Hello everybody and welcome to the midweek market update from Smack the Markets for the 4th of March. So as the coronavirus continues to spread around the globe, so does market volatility as well. We've seen a huge amount of market volatility in most financial market systems now, and even more so this week. That's caused the central banks to come together and discuss some sort of plan of action as what they might be able to do to lessen the impact on the financial system. As a result of that, the Federal Reserve came out with a surprise 50-point basis cut in interest rates yesterday. Now, that 50-point basis cut was widely expected to happen, but not so soon. It was expected to happen later on this month. Now, not surprisingly, that's had relatively little impact on the markets so far. So let's take a look at how the markets have fared that we discussed on Monday and some of the opportunities that we're looking at going into the second half of the week. So if we come and take a look at the Dow first of all, and if we look at this here on the daily chart. Now on the daily chart, if we go back to Monday, what we were looking for was the market to break out of this range between 25,000 and 26,000. So 25,000 down here, 26,000 around here. And we said that if the market sort of breaks out to the long side here, we were expecting 27. If it broke out to the short side, we were expecting sort of 24,255 or 20, and then 23,300 respectively to the short side. Now we can see what's happened. The market did manage to rally up, and it managed to get up here to the 27,000 level yesterday. This was on the Fed rate news, but then you can see that the market sort of sold off pretty heavily since then. So what now really for the market here? Well, if we come out of this and come to the 4-hour chart, you can see why we highlighted 27,000 as a target point here to the upside, and that was because we had a bundle of analysis here, a bundle of structure levels, fib studies from the recent leg of the trend here. So from a technical perspective, 27 made sense, and we can see that the market actually hit there. Now, what now really for the market here? And I suppose from a technical perspective, if the market gets above 27 again, that means that we're going to see significant strength above in the market. We may well be seeing 27,500, 28,000, 28,500 as those sort of key structure levels going higher. On the weak side, if it actually takes out this sort of low down here, which is around 25,800, which on lower time frames is quite a technical level as well, then we could see significant weakness back down to sort of retest the 25,000 in the near term. Now that's quite a huge range already that we're looking at here, and in some ways that's not sort of particularly helpful from a longer term trading opportunity. Having said that, that gives you some kind of indication as to the volatility that this market is in at the moment. So for us, very much this is very much a day trading playground at the moment, and we're just looking at trading these markets in between these sort of structure points in the general direction of the trend of the day. We can see at the moment the market's having a bit of a recovery after the big sell-off yesterday. We've got an interesting sort of price point here around 26,600. Again, you know, if the market gets above here, then we've got a bit of a trading window up there to that sort of 27 again. So we'll see how this one sort of plays out, but it's for us, it's very much day trading only on the Dow at the moment. If we come and take a look at the other markets that we discussed on Monday, so we said on dollar yen, again, we were looking for dollar yen here. If we take a look at this on the daily, we're looking at opportunities here below the 108 level, and we can see what sort of happened on Monday. The market rallied up to 108.50. We got a rejection off that technical level there, took out 108, and it then moved down to close the trading window down here to 107. So this has played out nicely now, and the move has has occurred, it's again, you can see the extent of volatility that we've seen in the markets, but the technical move here has now sort of played out. There are other levels to the short side on this. Again, from a technical perspective, we might see some kind of bounce up here to maybe retest 108. We could see again further weakness once we get sort of through sort of 107, but playing the dollar at the moment is again, the markets are highly volatile because it's trying to understand what sort of impact, if any, those interest rate cuts are likely to have. We also looked at Great British Pound against the Swissy, and again, if we take a look at this on the daily to see how this played out, what we were looking for on Monday was a break of this level. Well, in actual fact, on Monday when we spoke and I recorded the video, the market had broken this level here on the daily time frame. This was a key structure level for us. We're looking for the trading window down to the sort of 1.21, 1.22 level here. That now completed, so you can see the market sort of fell for the next few days to close that trading window. Now again, we still like the Great British Pound short here. We like general sort of safe havens as being strong as well. So the Swissy has benefited from that considerably, and so has the yen generally as well. If we take a look at other opportunities going into the second half of the week, again, because of the volatility that we've had in the markets, from a technical perspective, there doesn't look to be an awful lot that are quite tight. A lot of things are looking quite stretched at the moment. So intraday trading opportunities are really the sort of things that we're looking for. So if we come and have a look at things like the Aussie dollar at the moment, the Aussie is strong. We've seen significant weakness in the US dollar recently, and that's helped this market here put in some kind of retracement rally here. You can see that overall the dollar, the Aussie has been quite weak here, forming this daily trend, but some sort of retracement, even I mean, to an extension, if we could get back into this sort of 166 level up here, 166.60, that is quite a structure point here, and there's still plenty of distance to go to the long side. Now, not even looking for that level to be tested, if we just look for structure on the lower time frames, if we look at the mid time frame here, you can see that our structure level here around 65.80 has now been taken out, and we've got the context of a long trend forming on these mid time frames. So again, looking at intraday opportunities on some of these markets, this is the sort of thing that we look for intraday plays to the long side. If we come down to the lower time frames, you can start to see that there is sort of evidence here of a long trend forming. We've got levels here that the market, once they've broken out of this sort of level, will demonstrate that we've got strength here, and we could be looking for trading opportunities to the long side. We've even got higher lows forming here, and a bit of geometry starting to form as well on these lower time frames. So in these volatile market conditions, these are some of the trading opportunities that we're sort of more focusing on to play the intraday moves rather than sort of get positioned for longer term plays. So there's a few markets there that we're keeping an eye on going into the second half of the week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.